Hey, good afternoon, everybody. Welcome. We're going live on YouTube again today. I don't know what the hiccup is with Facebook, but anyway, we're glad that you're here with us. And Dan and I are here to speak about swing and day trading gaps. And we're going to cover some basic information about gaps, and we're going to cover some advanced information about gaps after we lay that foundation down, and we then go to look at the live charts and see how they're gapping and talk about how we interpret these gaps for swing and day trading. So let's get to it. We'll just do a little intro there. Simple market analysis and education to help you make money in the markets. Join us live each week on Facebook and see past episodes. Unfortunately, we're not on Facebook today. And now your show hosts, Ray Capra and Dan Gibby. All right. Hey, Dan, welcome. How you doing?
Hey, good afternoon, Greg and fellow traders. Doing great and just watching the market as I always do with one eye on the other computer. It's interesting times, obviously. It is every day, but as we tell our traders every day in the Master Trader Green Room in terms of preparation and throughout the day, I mean, you say it best. You're like, we're always in information gathering mode. We have the skills to apply objectively to whatever we're looking at. And that's actually a great, lead into today's subject on trading gaps, because even if the broader markets or indices aren't setting up for something bullish or bearish, we always, every single day, we find compelling gap trades, particularly in earnings season.
Yeah, well, earnings season for me, Dan, which I've expressed in the room, I actually hate it other than the gaps, because it just creates a lot of uncertainty about the patterns. So when it's just like any other news event, whether it's a Fed announcement or something that's coming, and you see a pattern that suggests prices are going to go in one direction. And of course, the news can just throw the whole thing out of sync. So that's what I don't like about earnings season. But as far as gaps goes, it presents a lot of opportunities because stocks gap on earnings. Now,
Right.
and as we look at that,
or for any other reason, being in the newspaper. Yeah. So that's why even without earnings season, we find great gaps every day.
Right. And well, it's not the subject of today's event, but as far as earnings season goes, if it was one stock that was going to report and gap, we could either avoid that or make it our focus. But when you've got a couple of hundred, and things could be torn in, multiple directions, it just makes it a bit rough, to determine the direction of prices the night before, of course, even though the pattern is what it is. Once it gaps, well, then, it's what we're going to go through today, an assessment of that gap as it relates to multiple factors.
And back to the title of today's show, swing and day trading. And I could actually put in there core trading, which we refer to as a whole, long-term wealth building trade, because it's, as we go through the charts, as Greg said, when multiple time frames are all in alignment, if it's igniting a new move up or down, then we might say that we're going to be in this trade for a very long time. At least that's our initial intent.
Absolutely. As we say, it always comes down to the chart. And one of the things we focus on is it a professional gap igniting a move, or is it a novice gap that could end a move? And, we always get questions as to, okay, which one is which? How do I determine what it is? So Dan prepared, a slide here. I see someone actually raising, maybe they're raising their hand. I don't know. Guys, anything that you want to ask questions, those of you that are in the chat, you're welcome to just type it in there, and Dan and I will answer it.
And Greg, I actually shared the gentleman's email with you today, and I'm not, I guess he hasn't been trading, at least with us, for very long, but he says, what's today's subject? What is a gap? And so before I even get into these, let me define the textbook answer of what a gap is. It's where there are no trades, and even back up before that. What is a trade? What's a print on our time and sales? It's an agreed upon buyer and seller at that exact penny for that underlying instrument. So can you have intraday gaps? Of course, with fear and momentum, people are chasing and willing to accept a different price to get out. But today we're going to focus on the opening gaps and how to make money from them, both igniting gaps, reversing exhaustion gaps, but all gaps are not created equal. Just because something opens different from the closing price doesn't mean there's a trade opportunity.
That's for sure. I mean, and I'll show you, my gap list, and there's a lot of stocks in there that are gapping, but they're not all great opportunities. So it's a starting point, that gap.
And in this 1 hour show, we're going to give you a fantastic, we obviously can't teach you to become an expert gap trader in an hour, but rest assured, we are going to power pack a ton of information for you to see the value of trading gaps and the meanings from them, and how we very quickly filter out the good and the bad. So we're going to show you two special gaps that we've given them special names because they're so powerful. And even with those powerful names, it doesn't mean you take them. It means, okay, it's a pro gap or a novice gap. Now let's go through the rest of our analysis to see if it's worthy of a trade. So Greg, why don't you tell them what we've labeled a professional or igniting gap?
Yeah. So it's really simple. We say a professional gap is one in which, Dan said it, it's igniting a move. So whether that, and they primarily come either out of a base, at a consolidation, which can come either after it went up or down. So you can have a stock that had been declining for a while, had been going sideways, and that's something that you have to look at and say, determine how long has it been going sideways. If it's been going down and went sideways for 2 days, that's really not the type of gap that may lend itself to a gap trade. It certainly could intraday, but as far as a swing trade, maybe not. Whereas if it had gone sideways for, say, 2 months, and then gapped up and just cleared that resistance, that could be a day trade and a swing trade. So there's different combinations to say, how did that set up? You could also have a professional gap in a stock that was in an uptrend and went sideways versus down and sideways, or stock that was going up and pulled back for several days, 5, 6, 7 days to an area of support, formed a reversal, and then gapped up. So these different scenarios or flavors of these gaps present different setups or situations and how to take advantage of them. And that's, of course, what we're going to talk about. And you have to know, because if you don't, you can, misconstrue what you're dealing with, and then it turns into a loss.
And one thing we're definitely going to cover, but I get the question all the time, is people are saying, hey, Dan, look at that pro gap. And so let's reserve this discussion for the real charts. But how do we put in words to teach them? I mean, you and me, it's, unconscious competence. We just know, but when we get to them, let's not forget. How do we help people determine when a pro gap is too excessive? And our conclusion is based upon reward to risk. How much more do you think it's going to go versus how much you're risking? But let's get to that in a minute. So, and so Greg gave you different flavors, of course, and We just define it as it's igniting a new move. And Greg gave you the different flavors. So just in this little stick figure, you can see that the market participants are exchanging shares. So it's in a trading range where they're in an agreement of what the value, if you will, of that stock is. So there's really no trade opportunity to us. We don't care the source of the news. So this stick figure gap up, I don't care if it's on earnings, the CEO, getting resigned. Bad earnings would be even better, but that's a separate subject. A stock that goes up on bad news is more bullish. But it's now time to get out of this trading range, and it's igniting a new move. So again, Greg gave you the different flavors of that. So you see in bullet number 2, come from consolidation or a shock pattern. And that could be a shakeout. But again, I'm a visual guy. We'll get to many examples instead of throwing terms at you.
Right. But Dan, let's not go too fast. So when we get to the charts, there's a lot more information.
Sure.
So this foundation is pretty important, meaning, you made this a great point about a bearish pattern or a shock. And when that's one of the criteria that I review in our gap course, meaning of the criteria to determine the type of gap, one of the things, is there a shock? In other words, is it gapping above a red bar or a green bar? And so the way this has been put together here, it's gapping above a red bar that closed on its low. And when we look at those charts, we look at it and say, well, what did that chart represent at the time? What were others thinking? And on that particular bar, what were others thinking and what positions might they have been in? We can consider the possibility that some were short since it's a big red bar and it closed on the low, and then it gapped above the high. So that leads to the question, what are those traders going to do that are in that position? So there's a lot of psychological elements to a chart. It's not just about whether it's some candlestick pattern that you read in a book that says, that is some type of a, piercing pattern or dark cloud cover or whatever.
Right.
What is a good point about?
Right. And the way we, teach obviously is, individual candles and then the combination of the candles, which represent a trend in different patterns of bullishness or bearishness. We are always focused on what are the traders thinking in that pattern and or bar, as you just said. So yeah, great point.
Yes. Right. So, that when you have that shock element to the gap, it's like, hey, it's not like, it's what we do. I give it an extra point.
Absolutely.
Meaning did it gap above the high of a large green bar? Because there's that expectation that it's going to go higher based on the chart. So those that bought it and held it overnight, what do you think they're going to do?
They're either going to be what I call a deer in the headlights and start praying, or
if it's a green bar and they held it overnight, not the red bar.
Right. I was answering the red bar. If it was a green bar, well, then they're high-fiving and saying what a genius they are. Right.
So from that point, several things we have to do. One of them being, well, what is the size of the gap as it relates to those that held it overnight? If it was a small gap just clearing that red line of resistance, think about, those of you that are listening, what would you likely to do versus it gapped up to the word gaps on the top of the slide? So patterns do suggest the actions of what others are likely to do. So I'll tell you what I would do if I was long and there was a prior green bar and it just cleared resistance. I'd be thinking, okay, hold on here. If it takes out the first 5-minute bars high, it should run. Whereas if it gapped up to the word gaps, and let's just say that from clearing the red line would be 20 cents versus up to gaps would be $1.50. What would you do if you had $1.50 profit?
Take it.
Or you'd sell some, right?
Right.
You're gonna put some money in your pocket, which would
Right.
then lead to a different type of potential setup to get long, which could lead a pullback entry to a gap, or it could be a continuation pattern. So depending on size of gaps, the structure of how it gapped from, they lead to different probabilities and then different setups that we can utilize.
So, all right, so what do we do on these patterns? Once we go through the rest of the analysis to give it a green light, so to speak, and we're going to show you how to do that shortly, then you have to go to your trading plan and put on bullish stock and or option traders if you're an option trader. And so the way Master Trader teaches options is we have both directional option trades and income producing trades. On a pattern like this, you can do both. And we give sometimes all three of these recommendations, knowing that it's up to the trader to make his or her own determination of bullishness based on their trading plan. And so the reverse, obviously, we call it a bearish pro gap. It's igniting a new move lower. Now, our other term that we're going to cover today, and actually I grabbed a slide that I had put on Facebook the other day because it was just amazing, but we'll get to it in a second. Selling, well, again, I pulled this from an option slide real quick, but we're talking stocks and options, day and swing trading. But a novice gap, we define as significant. How do you measure that? It's visual. Just look at the chart, and if it looks like a really big gap after this marathon runner, if you will, has already been up 5, 6, 7 bars in a row, and then you get a gap in that same direction on a climactic and a novice gap like this, again, we're thinking of the people. It's like the last of the Mohicans, so to speak, of the greed. It's a picture of greed, of capitulation, where some buyer has watched it go up, 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 up. And he's at the lounge or wherever he brags with his buddies after work. And they're looking at him and say, you don't have any Facebook? You don't have any Apple? Are you crazy? The train has left the station. And then it gaps up again, and those people get sucked in. We're going to show you how that suggests an end of that move.
Right. Yeah. And, again, we always kind of bring it to someone's attention as to what would you do if you were long from the first little bottoming tail bar and it's working its way up. You're high-fiving yourself like, this is an awesome trade. I wish they all would. And then it has this gap up. So you've got those last of the Mohican guys jumping on board, what we would call in a fond way, the idiots. and those that have been long and saying, hey, how can I not take this money?
Okay, right. So it's a combination of those two. Remember, every trade is a buyer and a seller. So correct. I was answering the novice buyers, and you're referencing the intelligent sellers. Right.
Right. So and what happens with this type of a gap is, well, they can act differently, but a lot of times gap ups, even novice ones, do not fail immediately. Right? Sometimes it takes a little while. And so as the pattern develops,
wait till you see the next slide. But
right, so what is fantastic is not only to get a novice gap, but to get a shock where it actually tried to go higher. I mean, that is, like what I'd call the picture of money, when it does happen, because it even gets
Are you talking on
Traders call it.
intraday charts?
Correct.
Okay.
Correct. So, different patterns set up every different day. And you need to have these tools that we teach on how to interpret what happens on different scenarios. Whereas, you get caught up into thinking, okay, it has to have this particular pattern or picture. That's too limiting, because the markets don't have to conform to the picture that you want. But if you understand these different pictures or scenarios, you adjust with it.
Right. And again, I'm referencing just options in here because at the last minute I just yanked it from that file. But we're on patterns like this. We're looking for day trade, swing trade, stock and option bearish trades. And actually, selling call spreads, that's one of our favorite income strategies that we teach at Master Trader, and is also the subject solely how we trade in our Master Trader weekly advisory, the weekly option traders. We sell options and spreads 10 days or less around the charts. And we did a beautiful one just the other day on Amazon. We love selling on the day of expiration, but again, that's a separate subject. But we're looking for stock and option. And just the opposite of this, this one's the last of the Mohicans. On the pain side, a novice gap to the downside, it's somebody feeling pain. Whether they knew that they should have taken their stop or not, it doesn't matter. All that matters is they're holding losses, pain, 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 pain. Gaps down, and they just hit their pain threshold. They sell their long position, they kick the cat or whatever else they do in frustration, and that often marks the low.
Kicking cats, Dan?
I said whatever their pleasure. This is one I put in when we do our pre-market analysis and looking at gaps. And I know Andre, I think, asked a moment ago how would we find these, and they're very simple. We just, on our trading software, we just, in the morning, we have two columns, and we're just comparing the change to the prior day's close. And we just then analyze those, and we're going to do that with you when we're done with these slides. But this stock, so I did this, how many days ago? 2 days ago on Monday, I put this in our Facebook private group. So just for a minute, let's think, since we're talking about these last of the Mohicans, the novices, the pros, this and that, just look at the math of what I typed out here for you. This stock is up 363% in 4 days. Master Trader would teach you to get in on that very first bar. That's a wide range engulfing breakout bar on volume, closing at the high with what we call a price void, which we're going to get into more when we look at examples. But it's breaking out and there's no resistance to the left. That was the intelligent place to get long AWX. And I don't even know what this company does, and I don't care. But it's up 363%. And then look what I grabbed on Yahoo. It's up 211% as of 8:12 a.m. And who is buying at those levels? What do you think the next likely move is?
I can tell you probably who might be selling it, Dan.
You and me and our graduates, absolutely.
Well, go back to that first slide and let's look at, you see how that traded May, June, July?
Yeah.
I just want those that are not familiar with,
that looks like pump and dumpers.
This looks like a pump and dump
Right.
scenario.
Right.
Somebody was buying that and they pumped up the news and sold into that. And, I think this is the one that gapped even from that gigantic wide range bar.
Well, that's the next slide, but no, that's an excellent point on that, on the pump and dumpers. I actually use the same words before you did. And I'm curious, not again that I care, why did it work this time? Maybe they had a better pump and dumper marketing company this time.
Well, I mean, it's really getting the news out there to enough people. And, this is a big thing today with these penny stock room traders. And I'm not saying they're the pump and dumpers, but when they catch one of these penny stocks getting attention, they jump on board, and then the whole thing tends to feed on itself. And the guy who, created the pump and dump scenario, he's like, thank you guys.
He's absolutely,
So, buyer beware of everything. And what seems like, this is the latest scenario of the next, Microsoft or whatever it might be taking off for the moon. They can come down to earth pretty darn quick.
Yep. So you can see here on the left, that's my 15-minute chart, and the dotted lines are showing pre-market. And it actually went up to, as you see in the words there, 35.55 was the pre-market high. And I just grabbed this 6 hours later. Look at that, 78% drop. So the guy on the left obviously is a figure of greed. And then the guy on the right is whoever bought up there. It's like, you're an idiot. You're uneducated. And right now I'm looking at it, it's $3.78. So it took another 50% haircut from here. So like you said, buyer beware.
Yeah, there are people holding that in a lot of pain right now. And
but right. And, not to, keep giving little commercials here, but if you take our course, this will never happen to you. Then you just have to battle the emotions in your head to follow the proper rules. So so that's it, Craig, if you want to take over and we can look at some.
Yeah, give me a second here, Dan. I'm in the middle of just creating a little something here.
All right, well, in the meantime, let me show just some ones that we were looking at today. Apple. So my bottom left here is my daily chart, and this is what we call a professional gap. Why? Because it's a bullish gap from multi-month consolidation. Look at these moving averages. The 20 got curled up today because of the gap up, but they before today, they were pretty flat. But the 50's still rising, the 200's rising. I have a bullish weekly and monthly. So it's igniting a new move from sideways consolidation to up. So that's a pro gap by definition, but that doesn't mean we jump on board. We have some other analyses. And the other analyses are, again, these dotted lines are my pre-market, and we just wait. Typically, we make our gap decisions 9 out of 10 times within the first 30 minutes of the day. And that's the beauty of the Master Trader Green Room, is because we rank the best gapping plays. We put them in a little thumbnail 5-minute chart, and we're just there watching them for the proper go, no-go decision. So on this one, it kind of had a double top into the market open. It was just consolidating. So we were in no rush. We would either buy we're looking for a bullish intraday entry. That's it, with no resistance to the left. So it has a potential target. And, right around this time when it wasn't retracing and the Qs were showing strength, we actually just did an option trade. So we sold an out of the money put spread that expires this Friday. And we're up huge on it already, just in a couple hours.
I can throw mine with the scans in there. And,
sure. AMD the other day, right, let me just show them this one. So on July 26th, this was a bullish gap over consolidation. with a bullish weekly and monthly, and we gave both bullish stock and option trades on that pattern.
Right. Okay. So let's switch. And okay. Turn chat so I can see that. Okay. So there's the apple that Dan was talking about. And not so much of a complete shock, but this was a nice gap as well. And one of the things that you'll notice in this list is the percentage of the gaps. And many times these huge gaps will actually keep going. So what seems excessive isn't always as excessive as you think. And I wouldn't call this excessive. And we measure excessive first by the percentage of the gap, but you also to look at how far did it gap away from what was resistance. And it's not that far away. And it was basing, and it did gap up from a pullback. So that was a nice gap, but it also creates what we call a price void. So gaps have to form patterns in the moment to suggest the direction. And look at what happened first thing in the morning. We can scroll it back there. So what did that first bar suggest was going to happen?
Yeah, lower.
Yeah, it's gonna go down. So we have a step-by-step process of saying, hey, is this the time to do something if you're thinking long? And you might be thinking, well, I was thinking short. Well, gap ups from stocks, unless they're novice, they typically keep going up. Whereas futures, they tend to go for gap fills. It's just nature of the instrument. But so how we approach this, how I approach it, and this is how I teach it in the course, is that this gap up created that void, right? So now as it forms a pivot or support, it's now created support where there wasn't any. And now on the retest is where you have a high probability setup because you've got the support. And I think this is where you did the put spread, Dan.
Exactly correct.
Right around there, after it did the retest, and it was like, this now has created new support to have formed an entry. Now, what a lot of gap traders will do is they'll enter above the high of that bottoming tail bar, and that can work out. But most of them will be gone with some pennies. And that's why I'm not, that aggressive first thing in the morning, especially off a 2-minute chart, unless it's what I coin is like it's got everything going for it and how I go through my system of checking. But on this retest, that's a nice setup. And then can it get through that blue line is the opening price? And we don't know at the time. And, we wait to see what it's going to do. And the overall big picture, if you will, as I call it, suggested that it would go up. And then, we take a look at what the market's doing. And that's why I have the cues here. You see, as the market began to hold together, you could see that's exactly where Apple began to take off. And you might say, did Apple make the market take off, or did the market pull Apple?
No, actually, no. I'm in the trade, and I gave it, and I actually said, yep, this retest, it's not retracing, and I noticed the strength in the cues. So correct, that we put all that together.
Right. So someone was at, how do we find the gaps? This is, well, most software, just software that just comes with a platform, will have stocks that are moving pre-market. But this software, these are what I would just say, custom gap scans that I've created within certain price levels and volume. And it won't find every single gap, but I don't want every single gap. And that's why it has these lists. And then from there, it's just a matter of flipping through and looking at these and saying, hey, that was a pretty big gap, 14%, 15%, but I've seen gaps of 14 or 15% keep going. So not everyone will. And this one gapped up into resistance. So that's not the type of gap that I'm interested in. I love when they can clear that a bit, but we never got a pattern over here, for me anyway. And I will typically use the 5 minute, but the 2 minute can work first thing in the morning. And we just start going through and looking for these setups.
And Greg, just one more comment on Apple before we move forward. That I just looked on my account because I'm in it, and this is the reason why we love selling credit spreads on earnings stock when volatility is high in the morning. And we put the trade on roughly 10 a.m. So that is 2.5 hours ago. We are already 57% of max profit in 2.5 hours. So that was just a little plug of why we love that strategy.
And when does it expire, Dan?
Friday.
So as long as this doesn't come back down here by Friday, you get 100% of the profit.
That's correct. So we sold it for 48 cents a share, the 190, right. And see your green line there. We sold the 195 put, bought the 190 put to make it a bull put credit spread, took in 48 cents a share. So on a 10 lot, that would be $480.
Right. So I don't know that everybody understands what you've done here, or the strategy, because what you're saying is as long as it stays above 195 by Friday, you get your money.
100% of it. But if we wanted to take half right now at 57% of max profit, you could.
Right. But the thing here is that if I am a gap trader, well, I'm already gotten my money, right?
Right.
Because I'm trading, the morning and
correct
to be done with it.
Stock.
Whereas this can go sideways into Friday, you get paid. If it goes down under today's low and it's above 195 on Friday, you get paid.
Correct. Thirdly,
so
we're in trade.
Different vehicle.
Correct.
Right?
But we'll never turn this into a loser. So, I when the show's over, I'm going to tell them to stop break even at least.
So just to explain a little bit more, let's just say we went long 1,000 shares since, if Dan was going to say a 10 lot, we bought 1,000 shares of Apple at 199.
Okay.
198, 199. We got $2,000 in our pocket.
Correct.
If it goes down, our money's gone. If it's down here on Friday, we're losing $2,000 or more.
Right.
I was getting paid his $500.
Right. And again, just to make clear, so buying the stock is a 100% directional trade, and selling a put spread is just saying, I don't think it's going to that number. And if I'm right, I get to put money in my pocket to keep.
Absolutely. All right. So you can see I've got the cues here. So we always taking into consideration what's happening in the broader markets, because that could be what ignites a move. And we could argue whether Apple moved the cues or vice versa, but there are many stocks in the NASDAQ, and the market's influence is just that. It's going to influence the direction that prices are going in, and can be, the impetus that gets prices moving. So we do want to take a look at what's happening in the broader markets. And so just looking at the cues here, and what I use as what I call bar by bar analysis, this can give us a guide. Bottoming tail bar, red bar, maybe it's going down, reversal 180 back up again. Buyers are stepping up. So we have a very methodical, systematic method of interpreting price action and whether it's going in the direction that we believe it should, or whether it begins to change. Right? We have a method for updating that information so we don't get caught in the past. Right? Oh. I'm getting a request to look at PAYC. Let's see, which one of our subscribers pointed out to us in the green room this morning.
Correct.
And
it gave, look, and as you know, I like looking at the pre-market data when I trade gaps, and that was a beautiful pre-market, was consolidating like a tank, which is a bull in my case. And then you buy a 5-minute high. So this was a great setup. You had the shock on the daily, so it's a pro gap. And, you could have questioned, was it an excessive gap? And since it had the shock component, that made it acceptable to us, provided it set up intraday, which it did.
Yeah, right. And one of the things to consider here that made this an excellent gap, I look at the pre-market too, and then I get away from it after 10 or 15 minutes or so. But this pre-market chart was going sideways.
Right, at the high.
Right. It was going sideways after it moved up. So even though it was gapping, it was resting before it got going in the morning. And then, this cleared all of that resistance. I kind of kicking myself now from not focusing on it more. At the open, I was focusing on my, my own things. But I did hear, you and speaking to Sanjay about it, and it was a very nice setup.
Yeah.
So, yeah.
And then a cake we were looking at as a possible novice gap, just because it was gapping down to the 200 excessive gap, but it never set up intraday to give us any interest whatsoever.
Yeah, you had to do that one, I guess, pretty quick at the open. But again, this one was pretty quiet prior to the open. You can see as much as it was down, it was quiet. So to have shorted that, now you were probably looking at this for a put spread since the gap, I imagine, Dan?
Over the 30-minute high, I was looking, as a possible, right. For me, the gap was too big to short, but I was watching it for a 3-day put spread if it had a bullish 30 minutes opening session.
Yeah.
And it didn't, so I deleted it.
Sure. But, for a directional, that popped up. I just want to point out that a lot of times a 12% gap, which seems pretty excessive, the best thing to do the majority of time is to go with thinking it's going lower and look for a setup like it was here. And, that little move there, right? Well, it's not quite $1, but for a day trader, and it's a nice setup with the topping tails right there. I would have done it if I was watching it, because after a move like this, I'm always looking for a retest pattern. Now, this little retest there was a setup, and then greater than 100% retracement, take some, and then probably would have stopped out the rest, break even. But big gaps in stocks, they often continue to go in the direction of the gap.
Right. Now, in terms of our definition of novice, that's not a novice gap setup. Why? Because we defined for you novice, we wanted consecutive many bars of red bars in this case. And this was just getting started on bearishness. So on the novice ones, we want typically a minimum of 5 or more bars of the same color in the direction of that exhaustion gap.
Right. Mike was asking me, how do I have dates of November of 2018? I don't see that, Mike. Maybe I was scrolled back and it was into November of 17, but no, I can't put, not on this platform anyway, to show the future. Yeah. right, we could look at a few more of these, and
Sure.
any questions, guys, put them out there. But not all gaps are going to continue to go, and this one was only a 7% gap. But one of the reasons to consider what's the market is doing is it can hold up stocks. And this one had already been falling a bit, and it was close to its 200 MA. And it certainly could have gotten down to it, but probably would have been an okay gapper to do right there. So anytime I see something making a double top, I'm going to scroll this back a little bit, makes it a lot clearer. This is one of the patterns I trade all the time. So it was up into some old resistance and these double topping tails. Okay, that's a nice setup. And it's it's $1, almost $2. Well, you wouldn't have got in at that point there. So $1.50 would have been a conservative to get in on that. I see Dan's answering questions, and you could, if it makes sense, to verbally answer any of those for our listeners. Garmin, this is a bad gap because it's gapping up into all of this congestion over there to the left. So not every gap is going to be a day trade, but this could be a starting point for swing trades. You have to continue to follow them, meaning it hasn't cleared this resistance. But what I would do, right, is now go and look at the weekly chart. I say, well, it's at this resistance, but if it stays strong this week, it'll form a bottoming tail bar. And then the next question is, what'll happen if it gets above that? Meaning, is there anything to stop it? And this, folks, is one to keep an eye on, because this has what we call a void above. You got to go all the way back here to 2007 or 8, and the resistance is up here. So as this is going sideways here, if it can push through here, and it's not going to do it tomorrow. This is going to take several days of consolidating here, and this will be a great swing trade if it consolidates and then takes out this area. So make a note on Garmin and set an alert. That's what I'm going to do right now. I'm going to set it for a month. And I'm going to make a note.
And Greg, also, if you show another example of a bad gap, was a Dropbox today. If it is back to the word price void that we talked about. Whatever trade we take with a bullish or bearish bias, we don't want it to be in the middle of congestion, because then it's a mess. There's nowhere for it to go. So Dropbox today had a nice percent-wise 5% gap or whatever, and there was zero setup for us, none.
Yeah, it's actually almost a 3% gap.
3, all right.
All right. But yeah, that's the hourly chart. Even if we go down to the 5-minute, kind of, this is gapping down. There's no support whatsoever, but maybe it's beginning to turn. But I guess this was a gap up in sympathy with, the bullish gap in the market on Apple, and we'll see what happens here. This was an IPO, and a lot of times they go down and then they begin to recover.
Take a look at Golf Delta Sierra. I had it on my watch list this morning. And what I think ruined it was the 45-minute rally into the market open. It was holding very strong, and then I was watching it pull back, and it just retraced too deeply, and I lost interest in it.
Yeah, that one is a setup right here, Dan.
Right. But let me also just add one other thing. On the daily chart here, folks, if hypothetically this gap down another $8, whatever the case, then it would have been a potential novice gap. Because see the fluid sell-off far from the major 20 and 50 moving averages, similar to that AWX we showed you in the PowerPoint of the gap and crap. This would be a beautiful example of a gap and snap, we call it, a novice gap down, and then we're looking at the intradays to go long.
Yeah. There was a question in the other chat about intraday gaps. It's rare to see intraday gaps unless there's news. So an intraday gap isn't something we focus on, meaning on a 5-minute chart, it's gapping up or down. If you're seeing gaps intraday, it's probably because it's illiquid. And we don't trade illiquid stocks as day trades. And you can trade them as a swing trade, you know, and share size appropriately, but stocks don't gap intraday unless there's, you know, news. So, they shouldn't be gapping if you're trading stocks that are liquid. Now, you might think some of these scans here, right? So we're looking for gaps that are, you know, whatever is gapping, sizable gaps. And these check marks kind of just a fast way of me determining whether it's gapping above a high of a bar, is it gapping above a red bar, is it, you know, above the opening close. But these other scans, which I don't get too many of them, and sometimes they're, you know, great. You know, not every scan is going to produce or do exactly what you think it might do, but these scans are looking for powerful shock patterns, and that it's gapping below a wide range green bar. So a big shock, it gaps below that. So this was moving down a bit, and then it gapped down toward the 50 and reversed. So what we're looking for is not exactly this, right? So all of my scans are not meant to be perfect. So this one was okay, but it was gapping still at an area where there was some support. So not perfect either. And there were just no gaps that were gapping above a red bar today. So these don't always produce, but when they do, they typically work quite well.
Hey, Greg, if you can look at these two examples, because Andre actually asked me a question a few moments ago, which I typed the answer. So this will give us an opportunity to answer it both verbally and visually. He said, hey, well, I can't trade the market open, unfortunately. He unfortunately has a job, which I feel bad about. I'm kidding. And I said, yeah, I said two things, Andre. You can subscribe to our service, and we're gonna text you the great setup. But number two, you can still trade gaps if they give you another setup. So on these particular two examples, they were pro gaps that were big. They gave us no entry the day of, but when we have multiple time frames in alignment, meaning, hey, you know, I'm going to watch this for a couple days, and if it sets up, then we're going to enter it. So you gave me CTXS yesterday. It was a pro gap to all-time highs, and we're still watching a pullback. Today, TEAM, T-E-A-M, we put on a bull put credit spread based upon a bullish retracement after the pro gap. So if we can look at those two, when you get a minute, that would answer, well, it would give Andre and others just an example of you don't need to trade all pro gaps the first day, particularly when they're excessive.
So this one is on my watch list from yesterday, looking for a turn here for this to reverse back up again, because this was a big gap and got sold into, but now it's into the gap fill, and I'm looking for this thing to turn around. So here was a gap that obviously didn't continue. It certainly, it was the type that could have, but now I'm looking at it as a swing trade if it can actually turn in this area.
And
What
then
was the other one, Dan?
Team, we entered today a bull put credit spread. And we, there was a bullish intraday where we got in and we just sold and out of the money 70, 60 bull put credit spread. So that's all. We just waited for a pullback.
So what Dan is telling those of you that may not be familiar with that, what he's saying, I just eyeballed where to put those. So a 70, 60, you said, Dan?
Right, for 80 cents a share, correct.
For how many days? Friday?
No, that one's 2 weeks.
Okay, so this one has to stay above $70 for 2 weeks. But if it doesn't mean you have to hold it for 2 weeks.
Correct.
If this was to go up, right, tomorrow.
Then we would just trail the prior day's low, correct.
Right, or if it moved quickly, you could have a majority of your profit and take your money.
Exactly right.
Right. So credit spreads and options are a different vehicle with its own nuances that you have to know about trading them versus, trading the gap, the underlying itself. Another way of saying it, there's lots of ways to make money and of course lose it, but it's all about money management and a method of how you're going to take advantage of different scenarios. Whether it's gaps and swing trades, intraday trades, they all have their own, plan, so to speak, as to how you're going to take advantage of those. And without the plan, you shouldn't be doing it, and especially the money management part. So, low priced, right? Here's one that we would not trade, but it could turn out to be a good swing trade. Why wouldn't we trade it? Because it's gapping into all of that resistance. If it had gapped above this area, that opens up the door to moving higher. But this has to deal with this resistance right here. So we're just going to let it. And we'll come back to it. And all I do is I look at that and I say, okay, that's a nice gap. It was consolidating here. Maybe it was a victim of the market on this day. All I'm going to do is set an alert up above those highs. And I'm going to let the software keep an eye on it.
Well, but Greg, do you also want a lower alert, or is that one where there's too much resistance?
No, I wouldn't be interested in it if it started moving down.
Right.
I want it to stay here. I want it to be perfect.
Okay.
And then move higher. So if I set that alert to monitor it for the next month, and it should trigger before that. And if it doesn't, it'll just go away. Yeah. So we'll see how it plays out. Here's one of your favorites, Dan. Gapped up today, but hasn't gotten very far. Right. And it's done well, but I don't know. It looks like it might be getting tired. And do you use buy limits? Yes. Do we use buy limits? So yes, Caesar, what we would do in certain situations is use what we would call a buy stop or a sell stop with the limit. So when you're placing your order, right, you could say, let's just say, for example, this was a gap we want to buy, and we wanted to trade above, just say 37.05. We'd place a buy stop limit. We could set it at 37.08, which would say, fill me, and I'll give you 3 cents leeway to fill me within that leeway.
Once the stop hits, right?
Right. But if you set a buy stop, that means fill me at any price you want to. So if it was running, market maker might say, hey, here's a dummy. Let me fill him over here. And, it's a fast market anyway. It's not as bad as it used to be many years ago. with those kind of fills. But yes, when you're getting in like that, use a buy stop limit. If you're going to short, use a sell stop limit with a little leeway to get in. That's the best way to do it versus, giving it a market type of an order. Now,
but just for risk management, if you're away from the computer and want out of a position, then you have to use a buy stop order because you don't want to miss your stop price by 2 pennies and it fall $2 against you. So that's why we recommend you only trade liquid things.
Right. Well, with stops, I do use market orders. That was from entries, buy and sell stop limits.
Right.
Well, stop loss is just I want out. It could be moving pretty fast at that time. Yeah, absolutely. And a lot of times getting in, if I'm watching something in the moment as an intraday trade, I use a market order because I can see the spread at that time. And, if it has an excessive spread, well, then I use a limit or I'm just going to bid or go high bid versus taking the offer. So if we were trading Apple, which typically might have a 1 or 2 penny spread, and I want in, I could just send a market order to get in. Yeah. All right, everybody. I hope you enjoyed that show and picked up a few pointers there that'll help you. I did drop a code in there. If you want to take advantage of our gap seminar, you can save quite a bit on doing that. And by the way, those of you that take the gap seminar and have this software, want to get it, email me and I will send you this whole layout with all of these scans. And you just click a button and it loads them into your platform there. So
awesome.
Enjoyed. We will talk again next Wednesday.
Happy trading, everyone.
Thank you for listening to Master Trader Live. If you like the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the show when you like our page on Facebook. Just visit mastertrader.com. That's mastertrader.com.